Over the last 5 or 6 years, I've been buying a lot more gold than I have silver. So for me to say that silver is a better buy than gold now is kind of saying something. But I want to give you a couple of warnings as well that you must consider. Let's explore! When we buy precious metals, we do it so that we can protect ourselves against an ever-inflating dollar. The dollar has been losing value at quite a rapid rate over the last year or so, even more than that, beyond what they are targeting. That target is 2%. They want to get back to 2%, they being the Federal Reserve. Nonetheless, we are still more than double that right now. And some people feel that the consumer price index, which is the measure of inflation, is still out of whack. They don't measure inflation the way they used to. In fact, we talk about we haven't seen inflation this high in 40 years. Well, 40 years ago, they measured inflation differently than they do now. It is a much more liberal measurement nowadays than it was back then. And so purchasing power is being lost if you just hold on to dollars, which, by the way, I encourage you to do in the case of emergency. But also I encourage you to stack gold and silver and to hold on to it in the case of emergency. So diversification in an investment portfolio is crucial if you're going to have different ways to hedge and to protect yourself. And protection of your wealth is really the paramount thing. That's the paramount focus you should have. But we should also consider in doing this that we have to find ways to either get investments that make us money, but gold and silver are not those by any stretch, neither of them. But you diversify within the precious metal space. Usually that diversification is an allotment of gold versus silver. So there are times when gold seems to be a better buy in terms of its holding pattern. In other words, it doesn't fluctuate as much. And that is the warning, folks. Right now, the holding pattern for gold is such the case that we see a very high gold to silver ratio. And that gold to silver ratio is something that just keeps going up and down and round. But sooner or later, it's going to catch up and we're going to see some sort of a new normal emerge with a gold to silver ratio. That emergence is going to probably manifest itself over probably the next few years is my guess when we start to see a normalization. But what does that normalization mean? It means that we are high now, and we've been high for quite a while. And that new normal, I believe, sits somewhere between 65 and 75, which is a broad range of the price ratio, which again, people like to equate the mining ratio, which is somewhere between 7 and 9 to 1. And saying that silver is way undervalued because of the mining ratio. Well, the mining ratio is mutually exclusive. It does not affect price. In other words, the price of silver is something that is independent because of natural market forces and other factors, being that silver is an industrial metal, hence its volatility. There are times when silver trades as a precious metal, as a hedge, and there is times when silver trades as a commodity. And that is why we are seeing such a high gold to silver ratio. I'm going to be referencing an article here by Angela Barnes that did a little bit of study and interviews about this. I think that's quite an interesting thing here that kind of really speaks to where we are at with silver. Silver, we've seen over the past week or so, a 4% decline in price. You know, it was up over $24 not that long ago, and right now it is about $22.50 as I record this video. But nonetheless, there's thoughts and projections from the Fed, and that is going to come into play as to what's going to happen with both gold and silver. And I think this movements with silver's price because of the Fed is going to mean a drastic move one way or the other, and it's going to be with gold. So Vincent Boy, who's a financial market analyst at IG, has his thoughts about whether silver is a better buy than gold at the moment. His view is that the silver currently represents a better opportunity compared to gold, but noted it also has bigger risks and with higher exposure to volatility and a more concentrated market with few major players. The silver market is small. Volatility is key. That is really not a new concept. It's something we know, but many times we don't really think about it a whole lot whenever we go to make a buy. In other words, if we see a massive dip, like right now, we are living in a time where we've seen a pretty big dip over the past week, and it's a good time to buy. How do you buy silver when it dips like this? If you want to try to bargain buy of your silver to lower your dollar cost average, you must find the cheapest silver out there that is most liquid and recognizable. What you see spinning on your display ain't it. In fact, even the gold coin here has got some premiums that are relatively high for bullion products out there. You don't want to stack, even though these are highly recognizable and respected pieces of silver, the premiums are unusually high for the Silver Eagles and normally high for the Libertads. Libertads typically always trade at a premium because there's limited mintage. I think these are like 300,000 of these coins minted each year. So it's not really the best thing to stack. They're a thing of beauty. For sure, there's no question about that. But if you can't find a good deal on them and lower your dollar cost average, it just is not worth it because you're exposing yourself to even greater risk, which means you have to hold it for that much longer in order to just break even. And that's, by the way, not just adjusted in nominal dollars, but adjusted for inflation in real dollars. And so those are the things that you must consider when buying silver. You got to heed this warning, folks, that silver, it can be a risky venture nowadays. If you don't do it, if you don't buy utilizing some sort of strategy, and that strategy must center around dollar cost averaging in some form or another. So that is the warning here that we must take into account. And now, that being said, gold and silver follow some of these big trends, and if one is up, most of the time the other is up too, except much more dramatically. Silver might be a better choice for investors who are willing to take more risks and expect bigger returns. That sounds like an investment, doesn't it, if you do that? And to some extent, that is one way to look at it. You have a bigger potential for a big concern, for a big return, because if gold price goes up and moves up rapidly, silver likely will probably do the same, especially in this next bull cycle, I feel. Because I think this next bull cycle, however that's going to manifest itself, is going to be derived based off of a number of different factors, from geopolitics to realizing that the Federal Reserve really isn't able to really keep inflation in check as much as they'd like without causing an actual recession. And I think a recession could lead to a stagflationary period, which I think will be very good for gold and probably much better for silver during that time. And that is a period where buying now you'll see reward from that then during that time. Now, is that the time to sell? I'd say no. I'd say just hold on to your silver through it all, because in the end, it's going to work itself out in terms of wealth preservation. But the radical moves up in the up direction mean that you may be able to profit in terms of, what you could sell the silver for. But I don't think that should be the motivation for stacking silver personally. But if you are of that mindset and you see an opportunity there to sell, and you can get back and earn extra money on it, and you are the adventurous type, there's your adventure for silver. But I think there's probably other things you can, quote, invest in that provide probably a better and easier strategy for doing that, because with the physical, you have to keep in mind the premiums that you paid for your silver and what you're going to lose when you go to sell. So in other words, if you're paying, $4 above spot for an ounce of privately issued silver bullion per ounce, and silver goes up $3, you're short $1 when you go to sell it if they're going to give you back spot price for it. So, and that's a pretty big jump. I don't think anybody is expecting that to happen anytime soon right now, but hey, you never know. It dropped 4%, a couple of dollars, $1.50 or so here in just in the last week. So we could see that move up fairly quickly, but in the end, you know, you have to calculate your own risk reward for this. Now, we know what the Federal Reserve is planning on doing, at least from the testimony in the press conference from Chairman Jerome Powell, and they are going to probably raise rates 2 more times this year. And if there's any pause that's going to happen after that, it's going to be in 2024. Likely won't see a pivot until later that year, but we'll see if the economy starts to move in a negative direction in 2024. Then we'll see interest rates fall, and then gold and silver will start to shine then at a greater level. We'll see, but nonetheless, now in 2008, gold and silver came down hard when investors realized that the banking crisis would be painful for the economy, and they became massive buyers of the U.S. dollar. I don't think that's going to happen this time, though, if we see another recession come, because I think we're going to have an inflated dollar, which means people aren't going to have as much faith in it. And then, but now a recession now with high inflation means recession. It means stagflation. But then after 2008, investors came back to risky assets and the U.S. dollar fell, allowing the price of gold and silver to rise sharply. We saw that in 2011. I think that could be exacerbated potentially. Not saying it's going to happen, but that could be exacerbated with an inflationary environment of 3% or above, or maybe even a rise if they can't keep inflation under control and it goes up even just 1/10 of a point. That's going to be bad news for the Fed, bad news for the dollar, and good news for gold, and really good news for silver, I think, at that point. Because gold is trading at its all-time highs, or near its all-time highs, within $100 or so. And that ain't much of a move for gold. But silver's got a lot of potential to move up and up and up. So we'll see how that plays out. So that's the warning, folks, is it's going to be choppy waters for silver stackers for the next couple of months. And I think it's going to remain relatively low through August. And then we'll see it to kind of steadily move back up. I'm saying that it could hit $28 by the end of the year. That's been my constant prediction for silver. That's a pretty lofty goal, I think, for silver to get there. But I think next year we could definitely see silver move in positive territory to $28 and maybe even more if what I'm talking about does happen. But who really knows for sure? No one knows. No one has a crystal ball. I have one made of glass sitting in storage somewhere and need to pull out. But nonetheless, all being said, just know the risk whenever you're buying silver. So I hope you found this video insightful, educational, and informative. I'd like to extend a multitude of gratitude to all of you for taking the time to watch this video, and to encourage you to please rate, share, comment, and subscribe.